Hello ladies and gentlemen, my name is Bookkeeper Fazan. In today's lesson I'm going to teach you about the receivables. It is very much important lesson. Receivables, sales, right? What is the concept of receivable, how to you will get into accounting receivable cycle, right? I will also teach you accounts payable cycle in the future lesson, right? But in today's lesson I'm going to teach you the receivable cycle. Okay, so sales, revenue, right? We have got revenue. For example, there are two types of revenues: cash revenues and credit revenues. So what is meant by credit revenues? Credit revenues are those revenues which will be get money after some time, not exactly at the moment. And what is meant by cash revenue? Cash revenue is exactly at the moment you will receive your amount. At the very moment you will receive your amount. That's the difference between cash revenue and credit revenue. Okay, so revenue equals to sales. So revenue we also can say sales, right? So cash sales, credit sales, cash revenue, credit revenue, same. Okay, what these are the entries. I just want to give you the concept, ladies and gentlemen, the concept of general entries of account receivable of sales, right? Cash sales and credit sales. In other words, cash revenue and credit revenue. Okay, so for example, in the month of March, there is an entry. The first I sell it, for example, XYZ customer, whatever customer, 5th March, the total sales is accounts receivable debit, sales credit. So for example, on 5th of March, my whole sales, for example, I've got 10 customers and I just made the credit sales, not even one cash sales. I only made the credit sales 5th of March. Total credit sales is 5,000 of from 10 customers. For example, on that day, on 5th March, I sold to 10 customers and total sales is 5,000. Total sales is 5,000 on the 5th of March on that day from 10 customers. And because of this is not cash sales, this is not cash revenue, it is credit revenue. That's why I debit the receivable. I debit. This is total receivable of 5th March. That's why I didn't write the customer name in front of the receivable. I will teach you this in couple of seconds, in couple of minutes, right? First, I want to clear the concept confusions of receivable, of credit revenues and cash revenues. This is credit revenue, right? Account receivable, sales. This is a case of the credit revenue. Okay. Now 21st of November, I received the total cash from the customers. Total 10 customers. Total cash I received, I don't know, from 5 customers or 6. Total cash I received on the 21st of November, January, February, March, April, May, June, July. After so many months, I received the cash, which I made the sales of the total customers. The total cash I received from XYZ customer, from 5 or 6, I don't know. From 2000 cash I received, right? So my credit revenue becomes cash revenue, but only 2000 becomes cash revenue. Rest of the 3000 remain the credit revenue. Understand? So I received the cash 2000, still 3000 on pending. I didn't receive 3000, right? On 31st of December, some of my clients didn't pay me, right? They said that no, we can't, we are bankrupt and we can't pay you. So I want to close my books. Remember, we close the temporary accounts and we forward the permanent accounts. Means balance sheet, we forward the balance sheet accounts and we close the income statement account. So we have to close it. I have to close the sales. Understand? So in the basis of close the sales, I have to record the bad debt expense, which I didn't receive. Maybe I will receive next year. Maybe I will receive in January, February of the next year. But right now, I have to close my books because today is December 31st. For example, today is I have to close no chance receiving in that specific day. They will say me, some say me, I will give you in February, I will give you on March next year. No, I have to close my books, my dear. So that's why I have to close, I have to record expense which I didn't receive. 3000 I didn't receive, I just received 2000 in this year. So I have to close in the basis of closing the books. So what I need to record the expense. What kind of expense is this? It is bad debt expense. Bad debt means I didn't receive. the money, right? So expense debit. Now here's the case, ladies and gentlemen. I didn't credit allowance for doubtful accounts, or in other words, some people also say allowance for bad debts. I didn't, instead of recording allowance for bad debts or allowance for uncountable, non-uncountable accounts, undoubtful accounts, what I did is I credit the account receivable, total receivable of the customers. Understand? Here I'm not talking about the only one customer. Here I'm talking about the defaulted customers. Total receivable credit. Total bad debt expense this of the defaulted customer and total receivable of the defaulted customer credit. Understand? So 3000 receivable, because automatically on the balance sheet it will decrease. Receivable balance will decrease in the 31st of January balance sheet. And income statement, my expense will record. Okay, 3000. Understand? Now, I have to close this also because this is an expense I recorded. So, I close, for example, I close it. What is the way of closing? If we have expenses, we have to credit it if we close them, right? They have a debit nature. So, when we close it, we have to record on the credit side all the expenses. So, for bad debt expense is an expense. So, that's why I'm making a closing entry December 31st. So that's why bad debt expenses credit 3000, because I 3000 didn't receive in the month. Maybe next month, maybe next year I will receive January, February, March, April. No, but not this month, not this specific date, December 31st. Year is ending, financial year is ending. So income summary, debit, bad debt expense credit. Okay. Now on January 1st, ladies and gentlemen, for example, not January 1st, for example, 25th of Feb, for example. On 25th of Feb, their defaulted customers, next year 25th Feb, defaulted customer, after 2 months, defaulted customer came to me and they said, here is your money, man. Thank you very much for giving us time. Here is your money. But he can't tell the customers that I have to close the book. That's why I made you defaulted. I will not tell the customers. So instead of telling them, okay, I will receive the cash. I receive the cash. Understand? So when I receive the cash, as you know, I can't cancel it because I already closed it. Expense I already closed it December 31st. So after 2 months, February, I have to record because I'm receiving bank debit. It's clear, right? Bank debit. I'm receiving the cash. I'm receiving the money from the defaulted customers. 3000. Now, recovery. Instead of, it's my income, kind of income. Bad debt recovery. I will make another account on chart of accounts. I will create, which is bad debt recovery, which is revenue for me, kind of sales. Bad debt recovery. 3000. Understand? Now it becomes a revenue. So December 31st next year, for example, today, the next year, December 31st. After February, it's time to close the books. Next year, for example. So now expense chapter is closed previous year. Now this year, December 31st. Bad debt recovery means revenue debit, because it is the nature of credit. So I have to close it to bad debt recovery debit, income summary credit. Understand? So that's close of this chapter. Now, for example, you understand the concept, right? So that's how you create it. And how to close it? You don't need to close the customers, write off the customers, right? Because, for example, here are your customer list. This is the concept of entries. I hope you understand, right? So in the real life accounting, we create each and every for example, receivable, but we have an option in the entry in the QuickBooks Online, and so we take the customers, right? So system knows that which customer I'm talking about, which customer's receivable I'm talking about. Understand? So he will, this is the customers, for example, Alpha Bro, Sigma Pro. I have 4 customers, for example. Their balance is, if I click this, so it will take me this here. So I just link this sheet into this. If I click this, it will land me there, right? Sigma Pro. Okay. Let me edit it. How to edit? Just instead of even, I will have to write F. Okay. So ladies and gentlemen, These are my four, and these are my July sales. For example, these are my four customers July sales. Invoices, these are the invoices. Okay, what I did is I just link this balance which is 0 with this, right? For example, you understand the concept, right? Now I'm going to for example, today is 5th July, for example, 5th July, and account receivable of which customer? Alpha Bros, for example. So I have to write Alpha Bros. In the software you have an option, Alpha Bros. Okay, the sale is made for 5th of July, the sale is made for 2000, for example. 2000, right? 2000 sales. Okay. And on 6th of July, I made another sales of Alpha Bros of 4000. Okay, so 5th of July, 2000, 4000. So this is my customer. I go to my customers and I just create the July 5th sales, which is are all on the credit, right? No cash sales. What I will do is, for example, just I will create invoice, just write the invoice, for example, and credit, right? What is the amount? Definitely the amount is 2000, for example, first, right? 2000. Another invoice I create of the same customer, again credit, amount is, it's better if I link this uh, here, right? It's better. Okay, so again it's better to link with this. Okay, 4000, avoid the zero zeros. Okay, so these are the two. Okay, now what is the unpaid balance? This is the unpaid balance column. What you need to do, I already applied the formula, you just need to drag it, right? So understand, so 6000 is the I need to pay. So here already before that it was 0, now it's 6000 balance, right? Okay, now for example, on 15th of July, this customer paid me Alpha Bros. So the entry will be receivable debit, bank credit. For example, partial paid. He paid me partial, right? He paid me 1500, 1000, sorry, of this invoice, 15, uh, right, of 5 July. So what I will do is I record the partial payment. How I will record? Partial paid. Partial paid, credit sales. He paid me partial. So minus 1000. Understand? Amount is minus 1000. He paid me. That's why negative. So when I drag this, it will automatically 1000 less 5000, and balance become 5000, and here balance become 5000. It is linked. Understand? It is linked. Okay. Again, he paid me partial. Partial payment is again minus 1000 because 1000 is remaining of that one, right? So let me create the entry on, for example, 20th of July. He paid me same partial payment 1000 because the amount was 1000. Understand? So now 4000 is remaining. Understand? Here also will tell me 4000 is remaining in the customers alpha groups. Here you can see 4000. It is all linked because I received 2000 receivable is less, so 4000. Okay, for example, 25th of July, 25th of July, I have to record this again, the bank debit. This time full paid 4000. So account receivable credit 4000. Understand? 4000. Again I have to create it paid. This time no need to partial paid. 4000 minus 4000. Again you will drag it automatically. Automatically when you drag it, it becomes 0. Customer balance becomes 0. Why? Already paid all the things. Understand? That's how, again, the, you can say, again the next customer, for example, on 26th of July, second customer made, made the sales of the second customer. Second customer is which one? For example, you copy this, and this time it is Sigma Corporation. Understand? Sigma Corp. For example, 3000. You made the sales 3000. You go to the Sigma Corporation. Now the balance is 0 of the Sigma. Now just see. When you go to Sigma Corporation, you will see invoice. For example, you write the invoice. Amount is 3000, I guess. Which is the amount? Yeah, 3000. You made the 3000 amount, and the unpaid balance is 3000. When you drag it, 3000. In the customer balance is all the 3000 remaining. So that's how you made the sales, right? For example, this is December 31st, right? Today is December 31st, and he is not going to pay us. He said, I can't pay you the 3000. Sigma Corporation I am talking about. So please, I will pay you the next year, like March, I can pay you. So I have to close the books, right? I have to close the books. So in the books, which what I'm going to write is is bad debts. Bad debts. Instead of allowance for bad debt, I will just say account receivable. That's it. Account receivable. Sorry, Sigma Bros. I will do that. Sigma Corporation. I will just already decrease the Sigma Corporation account with 3000. Now look what I will do, because I have to close this customer's account. Understand? What I did is bad debt and receivable. So when I go this, I want to just in real life what I'm going to do is I just will pass the credit memo. Whatever you just need to reduce the balance of the customer's account. Sorry, here Sigma Corporation. I have to reduce the customer's balance. So what you can write, but in the software we will make the credit memo, right? just to decrease the customer balance. Whatever you want, say you can say uh, default, or you can write here for example default, or you can also write bad debt if you want. You just write bad debt, right? You just create a credit memo and just write bad debt. For example, credit memo of bad debt, right? Minus 3000. So it will become 0, right? So customer's receivable balance is 0. But it is a bad debt for you. Understand? You don't need to be happy. Now what will be the entry, right? In the income statement, I didn't make the income statement here. I'm just because I just not want to show you the receivable cycle, right? So bad debt. Okay, so the entry is journal entry, for example, will be income summary and bad debt credit, which is 3000. That's it. On December 31st December. But now customer came to me on 3rd of on 21st of March and say, sir, I want to pay you your money 3000. I said, okay, no problem. But already here I just written he paid me. So what I'm gonna do? I will. You can edit this credit memo, but what you can do? You can make an. You have to. You can reverse the bad debt expense entry as well. But here you already close the bad debts. You can't reverse the bad debts. So what you need to do here? First of all, make the entry. For example, bank debit. Again, which we written is bad debt income. Yeah, bad debt. What we bad debt revenue. Sorry, bad debt revenue. 3000. Understand? Bad debt revenue 3000. Now, what I'm gonna do? You don't need to if you want because it's already set. So you don't need to. But when you do that, because when you make an entry, it will change also here, right, ladies and gentlemen? So when you close it again, it will impact it here. So you have to raise it here first. You have to create the which is credit memo. You need to edit the credit memo in the software with the minus amount. For example, credit memo, right, with the so it will become 0. Understand? So you can make an invoice. You can also make another invoice if you want of 3000, or you can edit this invoice if you want. There are lots of options, right? So you make another invoice of 3000, for example. So here bank debit, bad debt revenue credit, right, ladies and gentlemen? So you receive the cash. Now you receive the cash, which is paid debit, right? It's paid. So what you're gonna do, you need to do is, yeah, minus 3000. Now it will become again 3000. That's it. You get it, and that's it. I hope you understand, ladies and gentlemen. So you will close this on the December to 31st. Understand? So I hope you understand it. The customers, the July sales. So that's how it works, right? MGM already zero balance. So we, for example, we didn't make a sales, right? Okay. Thank you very much, ladies and gentlemen. Take care and Allah Hafiz.